This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Hello again from TF Metals Report, and welcome to your podcast highlights for the last week of March, actually the last week of the first quarter of 2024. And what a tremendous first quarter it ended up being. I thought we'd end up kind of trading flat because I anticipated a change in rate cut perceptions, maybe some higher interest rates, a rally in the dollar, and all those things happened. But yet, gold's going to finish the quarter up 7.5% year to date. Now, we didn't know we'd finish that way as the week began. In fact, we spent some time discussing silver in our daily podcast back on Monday. Silver is not yet broken out like gold, and so therefore it hasn't had a rush of speculative money come in yet. The speculative money that did come in over the last 3 weeks rushed into the long side and flipped the hedge funds from net short 4,000 contracts to net long 37,000 contracts in just 3 weeks. That 3 weeks ended March the 19th. Over that same time frame, silver managed to rally, but just $2.41. I wrote about that this week for Sprott Money. You can go to their website and find that article. It's free. But anyway, all of that, the lack of participation on the upside as we wait for silver to finally break out, was all part of what we discussed as the week began on Monday the 25th. Silver, I thought I'd show you this. This is a chart I made for my Sprott Money post this week, which I'm sure they will publish probably tomorrow. I'll post that link when I see it. Remember we talked about the COT back on Friday? And the huge change in the COT that only got us $2.40, 10.5%. in a rally. Okay, the COT survey of February 27th, published March the 1st, showed that the banks on that date were net long 3 weeks ago on the 27th. How much were they net long? They were net long 1,700 contracts. In that same survey on the 27th, the funds were net short 4,100. Just 3 weeks later, March the 19th, last Tuesday, another COT survey, and now suddenly the banks are net short 26,000 contracts, while the funds are net long 37,000. So for a 41,000 contract shift, 41,000 contracts of net buying, all we got was a 10% move. Okay, so what I want you to be thinking about is all these people out there, Twitter and every place else, oh, silver's going to 35, and then it's going to 44, probably by summertime on this massive breakout. Well, if that type of a shift from the hedge funds only got us 10%, we're not going straight to 35. In fact, we're going to need a pullback and to work off some of that before we can even break 26. So, all of this still in line with what I've been telling you about what I expect to happen this year. I'd love to be wrong. I'd love to see silver go to 35 by summertime. But if that type of a shift by the hedge funds, that much buying, net buying, only got us 10%, show you how much the banks are continuing to fight us. One of the challenges we knew we were going to have to deal with this week in COMEX Gold was the expiration of the April contract. There was option expiration on Monday. The contract itself went off the board on Wednesday. That always results in net selling. One, there's legging out of spreads by the banks. There's also large speculating hedge funds that maybe have a 200 contract long position in gold. They liquidate the 200 contracts, but maybe they only buy back 100 or 150 in June, the net reduction of open interest. And so that net selling is something that always weighs on us in these expiration weeks. And that's what we talked about on Tuesday. And you can see that in the intraday charts, the selling based on COMEX the last 4 days. All part of what we discussed Tuesday. On Wednesday, we did not have a regular podcast, had a written podcast instead. On that day, the GDX broke out. Solid day. Broke through 30 and 30.50 to the highest close it has had yet this year. Would that foreshadow Good things to come on Thursday. Well, anyway, take a look at that chart. That was a pretty good chart for the GDX on Wednesday as well. Your discussion here, though, is from our podcast on Tuesday the 26th. Okay, here is a 5-day chart of April gold. In the boxes, those are COMEX hours, okay? So not much happening back on Wednesday, then price spiking on Wednesday, again with the Fed lines. And then that suck-in rally they had beginning at 5:16 Central Wednesday afternoon. But now look how, again, you see how during COMEX hours generally being sold yesterday, sharply being sold Thursday, Friday, and today. Again, these are contract rolls that aren't full and complete, and obviously record amount of task spreads. There's 209,000. A lot of times since I've been keeping track of it, it's 130 to 160,000, 30,000 a day for 5 days. Well, this time it was more than 40,000 a day for 5 days. You use that legging out process to smash price and keep it in check. As you can see, has happened over the last 4 COMEX days. The U.S. markets are closed for the Good Friday holiday on March the 29th, so your week, your month, and your quarter came to an end on Thursday the 28th instead. So on that day, in our daily podcast, we discussed the weekly charts, the monthly charts. Be sure to note that we hit the superfecta, all-time daily highs on the daily chart, all-time weekly closing highs on the weekly chart. The same could be said for the monthly chart and the quarterly chart. These long-term trends, very important to institutional money. So very nice to see, again, hitting the superfecta like that. All part of what we discussed on Thursday the 28th to wrap up the week. If we look at the spot chart on the weekly spot chart, which is next, you can see that we did. So you know how bullish this is. You close the week, you're in an up move, and you close the current week above the previous intra-week high. That's very bullish. I have said last year and again this year, when we break out above 2,100, new all-time highs, we're going to 2,300. We discussed with Chris Vermeulen a couple weeks ago how that lines up on a measured move Fibonacci basis too. We're getting close. But 2,300 is your first stopping point. And I would expect some kind of consolidation and pullback at that level. But for now, we're just going to watch it go there. And gold on the monthly chart, this is what that home office institutional hedge fund money looks at. How can you not say that's a breakout, something to be excited about in a secular, long trend bull market? I even put on here a little cup, breakout, handle, boom. Okay, if you were to measure all that out, we're talking like 2,700 is the next target after 23. Okay? Yeah, that just looked great. Silver on the weekly chart. Thought I'd draw this big old bull on here. So when I talk about silver not breaking out until later this year, it's got to get above 28 to get the action that gold has gotten the last month. But it's got to get above 26 before it gets above 28. And you can see all that here. But this bull, the symmetry of it, okay? If you think that it was 2 years, a little more than 2 years down from July, August 2020 to the lows in September 2022, 2 years, 2 months, that means 2 years, 2 months for the symmetry of it back up to 28. Well, that indicates this fall. Okay, so when I tell you, I don't pull these numbers out of my butt when I say, I don't know if silver is going to break out this year. It's going to be more like next year. I'm not trying to hold you off. I'm not trying to keep you rapt attention. I'm not trying to, talk down your excitement. These are what the charts are telling me. Okay? We could break out. I'd love to go to 35 this year. But I suspect that breakout's coming next year. You can also see that pending breakout on the monthly chart. Again, great monthly candle. We got to get above 26. Then we got to get above 28. That trend line off the COVID lows would suggest we don't get there until late this year as well. But then once we do, 34, 36 is the next target. Thanks again for listening to your TF Metals Report podcast highlights. Again, a daily podcast summary, just part of what you receive. as a member at TFMR. It's a very affordable price. I encourage you to check us out, especially at a time when gold is charging higher. Silver will get there too, and when it does, the mining shares are going to take off. You're going to want to be ready for that because it's coming. So a $15 a month investment in TF Metals Report, pretty wise move. Come join us, tfmetalsreport.com. As we get ready for next week, be ready. It's going to be a very busy week with a new quarter. And then, of course, next Friday, we'll bring the next jobs report in the U.S. It's going to be a very volatile week. And we'll be back here next week to summarize it for you with another edition of the TF Metals Report podcast highlights. Have a great holiday weekend, and we'll see you next week.